The payments vary each year. So we're going to talk about charitable gift annuities. Charitable gift annuities, the payments are fixed. Charitable remainder trust, the payments vary. Again, the percentage doesn't vary, but it's that fixed percentage of the value of the assets in the trust revalued every year. So investment performance will cause the payments to vary. Payments are not guaranteed, and an attorney is definitely needed in the drafting of these charitable remainder trusts. I just wanted to show you a quick example. So like a donor, as it says here, age 70, $50,000 charitable remainder trust, 6% payout. That would result in $3,000 of payments each year and a charitable income tax deduction of $23,000. You'll note that that is less than the amount of the cash contributed. The reason for that is it's different than an outright gift, right? I mean, if someone gave $50,000, outright, it'd be a $50,000 deduction, but you're not giving it outright. You're saying, yeah, but you need to pay me for my life. So therefore, there's an actuarial calculation based on life expectancy that accounts for the payments for the donor's life. Now this charitable gift annuity is kind of like a charitable remainder trust, but I was saving this one because we've got a little surprise at the end here, maybe. A charitable gift annuity is an irrevocable, as is a charitable remainder trust, by the way. Both of those are irrevocable gifts. An irrevocable legal contract between a participating charity, we're going to talk about that, and a donor in which the participating charity agrees to pay the donor a fixed annuity payment for his or her life or 2 lives in exchange for a donor's gift of cash or stock. The key there is participating charity. We at the IU Foundation offer charitable gift annuities. Your organizations, I'm fairly certain, do not. We are currently considering establishing a charitable gift annuity program at the Community Foundation. Tina and Peggy Frisbee and I have been looking into this and trying to dot all the I's and cross all the T's. And it hasn't been formally submitted to the board, but we're getting there. This would be good if we kind of get to this place, because it would be a way in which each of you could potentially broach this subject with your donors, with the sort of the actual nuts and bolts of the charitable gift annuity administration falling on us. And for us, now I'm talking about the Community Foundation. So stay tuned for that. I'm certain if and when we do offer such a service, that'll be announced very prominently to everyone in the community. Unlike charitable remainder trusts, charitable gift annuity payments are based on a donor's age or the annuitant's age. So the older the annuitant, that results in the higher percentage payout. And again, that's borderline morbid as well. We won't go into that, but that has life expectancy obviously plays into that. And then just like a charitable remainder trust, once the gift is realized, the charity receives the remaining funds in the account. And I wanted to just show you again, because I feel like I'm contractually obligated to show you some of these tax illustrations. This is how it plays out in the charitable gift annuity context. That just gives you an idea of what rates we offer. A 70-year-old would get a 5.3% payout rate. So on a gift of $10,000, that would mean $530 every year to that particular donor. One thing, we don't need to get into it, but just know that oftentimes a significant portion of that annual payment is in fact tax-free income, which is nice. And there you can see a similar situation like the charitable remainder trust example, where the deduction is not equal, obviously, to the amount contributed for actuarial purposes. Okay. Couple last ones, and then we'll finish up. Charitable IRA rollover. As this says here, I'd like to give to charity, but I just don't have the resources. Surprise! For a limited time, you can give from this nest egg. I'm sure everybody in the room has at least heard of this. The key is it hasn't been renewed for 2015, but it's been in existence since 2006. It always seems to get renewed. Now, as soon as I say that, it won't be renewed, but it has every year since 2006. What's funny was, in the early years, it would be renewed in August, and then the next year, sort of September, and the next year, October. Now it never gets renewed until, right when I'm trying to take time off for Christmas. And even in one year, it was actually not renewed until the following year and then applied retroactively. So it just keeps getting later and later and later. I wish they would just put an end to the nonsense and just renew it permanently. They're certainly being lobbied to do so, but it hasn't been the case. It makes it very difficult from a marketing perspective because you've got to let donors know this has been passed, but you don't find out it's been passed until December 27th, for instance. So you've got to jump on it right away. In fact, this year it was renewed so late that we at the IU Foundation, we didn't even send letters. We tried to do everything via email because we just didn't think we had the time to get that message out via U.S. mail. Hasn't been renewed for 2015, but we're going to assume it will be, so I'm going to give you a quick highlights of the details. 70 and a half and older. That's when a donor has to begin what's referred to as taking required minimum distributions from their IRAs. So 70 and a half always has been capped at $100,000. It must be outright, so you can't take those funds to fund a charitable gift annuity or a charitable remainder trust. It would have to come to your organization on an outright basis. The benefit, I've had several donors say, okay, why would I do this, right? I mean, if I take $100,000 from my IRA as a taxable distribution, I write a check to you for $100,000, isn't that the same thing as going directly from my IRA to the charity? The answer is no. There are benefits to keeping your income as low as possible on your 1040 personal return. You've got marginal tax rate concerns, so you could run the risk of going into a higher tax bracket. There are also all these things called phase-outs where all these deductions and credits get phased out the higher your income is. So trust me, it's better to go directly from the IRA to a charity. I will also point out, I probably get 3 of these checks per week even now when the legislation isn't renewed. And they come in and you can tell they're tied to the amount that the donor is required to take. Their required minimum distribution. The thought is a donor could make one of these gifts now. It's either going to be blessed retroactively and we're all going to be fine, or if the legislation's not renewed, no problem, it'll just be taxed as their as a normal distribution would. So that's why I say I wouldn't market them now, but if someone says, hey, I'd like to do this, you can do them now even before the legislation is renewed. Again, any charity can participate. Marketing is the key. Marketing is a challenge on these because you normally have a very short time horizon. I think that's it. Any questions? This is very odd how I'm doing this here. I want to make sure I didn't have anything else. Sorry, I didn't mean for it nearly to be that dramatic. All right. Well, thank you very much.
We'll take a short break again. We're going to have our panel. If you have questions, I'll be picking those up. Anything, again, to do with planned giving, please, just as simple or complex as whatever, because Tim, Brian, Pam's here, Sue's here, and we have Lori and Leslie are going to be on the panel. And so we have development directors, we have planned giving folks, and we have a donor who has a planned gift in place to benefit an agency, as well as Tim, who is, the grand poobah for this group. Again, on our website is the language for incorporating the Quest, which is the simplest planned gift. There's language on there you can use. I've seen many agency and other foundation newsletters that incorporate